Hey, it's Carolyn Grimm with Nonprofit Financial Mastery. I'm here today to talk about financial statements. So first of all, let's talk about what a financial statement is. What we're doing with all of our day-to-day activities is we're going to record the transactions. Those recorded transactions are going to increase or decrease our accounts, and then we're going to summarize those changes in our financial statements. And what financial statements are showing us is the health and stability of our organization. So it's important that we both have correct financial statements and that we understand how to use them in order to manage the nonprofit better. But beyond that, what financial statements do for a nonprofit is it helps us to tell the story of our nonprofit and what it is we are doing. Are we achieving our mission or not? All that information is hidden in those financial statements, but I'm going to show you how to find the magic. For nonprofits, when we're talking about financial statements, we're talking about usually 4 different reports. The first one is a statement of activities. The second one is statement of financial position, then the statement of functional expenses, and the statement of cash flows. Each one of those shows a different view of the health and stability of the organization. So each one is important, but in a different way. It's sort of like getting a 360 scan of what's going on in your nonprofit. Now, the first one, the statement of activities, in for-profit accounting, we would call this an income statement or a profit and loss. And a lot of times people will use these terms interchangeably: statement of activities, income statement. Now, on the statement of activities, it's going to have 3 key components. The first one is revenue. Where is the money coming from? The second is expenses. Where's the money going to? And then the third is changes in net assets. So if we were talking about a for-profit business, we would be talking about revenue minus expenses equals profit or net income. In the case of a nonprofit, we're not in it for the profit, we're in it to fulfill a mission. So we talk about that in terms of net assets. So if you take your revenue minus your expenses, then our net assets are either increasing or they're decreasing. Hopefully increasing, that would be a better way to go. But it says basically, are your revenues, the money coming in, greater than your expenses, the money going out? So that gives you one view of what's going on with your nonprofit. The second financial statement we want to talk about is the statement of financial position. In the for-profit world, we would call this a balance sheet. It's often used interchangeably. If someone calls it a balance sheet, you still know what they're talking about, but it is a statement of financial position. So the key components on that statement are assets, what the nonprofit owns; liabilities, what the nonprofit owes; and then the difference between the two, assets minus liabilities, we call net assets. So in the for-profit world, we would be looking at this as equity, whether the owner's equity or the stockholders' equity has increased or decreased. In our case, we are looking at, in the case of nonprofits, we're looking at assets minus liabilities, what we own minus what we owe, and that gives us net assets. And then we take those net assets and we divide those into either restricted funds or unrestricted funds, so that we're keeping track of those funds that our donors or grantors have said, we want this used for a specific purpose. And what the statement of financial position shows is financial stability. So if your assets are higher than your liabilities, that's good. Like if you own a house and the house is worth more than what you owe the bank for it, that's good. You have equity. In the case of nonprofits, we're looking at you having, so if you took your assets and you paid off your liabilities, would you have anything left over? So financial stability, do you have the ability to pay your bills now and in the future? So that's another view of what's going on in your nonprofit. The third financial statement we want to talk about is the statement of functional expenses. This is something that's unique to the nonprofit world. So what we do here is we take our expenses and we categorize them. Did we spend this money for program services? Did we spend it for management in general or administrative costs? Or did we spend it for fundraising? So what this helps to demonstrate is whether we are aligning our finances with our mission. So if the majority of your expenses are for program services, that's a good sign that the way that you're spending the money is aligned with your mission. You're not spending all of your money on fancy office spaces or fancy suits for the executive director. Your focus is on those programs, and that's where you put your money. The fourth financial statement is the statement of cash flows. And this is the same whether you're a for-profit or a nonprofit. Everybody gets a statement of cash flows. This statement focuses on one account in particular, cash. And what it looks at is it says, where did your cash come from and where did it go? So we're going to take each one of our transactions and we're going to categorize it in one of three categories. Is this for operating, the day-to-day operations of the nonprofit? Where did the cash come from for that? And where did the cash go? The second category is investing. Did we buy any assets? Did we buy a new delivery van? Or did we sell the old delivery van? So this breaks out any cash that we use to either acquire something big, like a vehicle, or to sell something big like a vehicle. The third category is financing, and this is related to our liabilities. Did we borrow money and then did we pay that money back? So it's looking at loan money that's coming in and loan money that's going out. So what this does is it shows us liquidity and solvency. So liquidity is, can you pay your current bills? Solvency is, can you pay your future bills? So can you pay the loan payment that's due this month? And can you pay the loan payment that's due 6 months from now? So it's another view of the nonprofit, and it gives you clues as to how healthy and how stable the nonprofit is. So some key takeaways regarding financial statements. Each financial statement gives you a different view of the health of the nonprofit. Behind the scenes is always going to be solid bookkeeping. You've got to know what you're doing at the base so that you can build out an accurate, reliable financial statement. And the final takeaway, the most important one, is that the numbers tell the story of how well the nonprofit is achieving its mission. Because when we're talking about nonprofit financial mastery, what we want to do is we want to build a stable, financially sustainable organization. And the main way that we can do that is by having those accurate financial statements that help us to tell that story. And the biggest takeaway when we're talking about nonprofit financial statements is being able to take the numbers and use those numbers to tell the story of how well we're achieving our mission. I will see you in the next video.